In today's video, we will be teaching you how you can learn the skill of trading so you can buy down here and sell up here with just these three simple rules, of which the last one is the most important. And we will also give you, after we've outlined those rules, a hint on how to, or a system on how you can actually start off with trading. So make sure you watch this video until the end. Firstly, let's start off with the basic assumption many people have. Many people think, well, they look at the chart and they see what has already happened. And they say, well, if I would have just bought down here and sold up here and, well, look at the price difference, then I would have made 100%. And that would have basically doubled my money. And who doesn't want to double their money? So most people get lured into trading by this assumption that it is really easy because, well, you just buy here and you sell here. And mathematically, that is correct. You buy here and you sell here and you double your money. Yes. The very problem just is, if it would be that easy, everybody would just be trading and everybody would just have unlimited money. That is not how it works. Also, to note, the market doesn't generate money. The market redistributes money. In order for you to be profitable, someone else has to lose money. And that brings us to our first concept, which is emotional control. The problem is, if you are looking at the chart and what has happened up until this point is this. And what's happening after this uptrend you cannot see because it hasn't happened. What you will probably be thinking in this area is that, I don't know, the price is at, well, in this case 54K, it's sort of weak price action. I don't really know if I want to get into this asset. Probably prices will fall even lower and then I will just buy lower and then I will take the rise to higher prices. That is way smarter. Usually, if the prices are down, it's hard to say, well, here I'm going to buy, because people usually want to sell when prices are down because they're scared of what is going to happen in the future, and they want to buy when prices are up because they know, let me just circle it, at this point people know, wow, this asset is really strong, it has rallied 100%. This probably is going to go on forever. It's going to rally another 100%. But that is just not the case, just not the truth. And that is exactly the problem. If you're down here, you're probably thinking, well, this won't go higher and I will just buy lower. And if you're up here, you will probably thinking, and you will be thinking this because you're an emotional human being and everyone thinks like this, and that's why the market works. Not everyone, of course, but many, many people. You'll probably be thinking, wow, this is going to go so much higher. I will just hold and make another 100%. The problem then is, at some point, a correction has to happen. It just has to. There is no way for a correction not to happen. And then you will go down here, and then you maybe think, wow, it's just a retrace. It's normal, and it will go up again. It goes up again, maybe, maybe not. And then it finally crashes down. And then at some point, you will have to sell at maybe a loss, maybe only slightly a profit, and you will certainly be mad that you've lost out on all of this. How you can control this better, we will outline in the last step. The second point, what we think, is practice. You cannot learn trading by just watching YouTube videos. You have to actually at some point do it yourself. That is the very hard thing, and you actually have to get skin in the game. And again, this is not financial advice, this video. This is our opinion, this is our advice, what has helped for us, and you are responsible for everything you do yourself. It's just, we think that it is very hard to actually learn the skill from watching other people do it. Because, well, maybe you watch me and you're like, wow, he's counting this structurally and he has a system that works for him and so on, and I'll just copy him. It's just not realistic, because at some point you cannot copy me because maybe I don't upload a video. Of course, if you're a member of us, which you can be if you check out the first link in the description, you can actually do that to some sorts because we update our members very frequently, but you actually have to be capable of doing this yourself. And that brings us to our final point, which is the trading strategy itself. So earlier I was talking about emotional control and it being one of the most important aspects of trading. Well, a trading strategy is what helps you mitigate the effects of emotions on your actual, trading experience. Now, let me give an example of this. What could, for example, happen is that you say, well, I have a certain system, and just to make this really, 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 really easy, the certain system says if it goes up here, and if it retraces, and if it then goes up and above the high which happened here before the retrace. Then I will buy. So you go in here and I will hold it for a duration of, well, let's say I will hold it until it is 20% in profit, or let's say 30%. So here. So you have made a trading system. Congratulations. Why does this help you? Because now you're going to think, well, I didn't buy here and sell here. I bought here and sold here. What's the point if I could have bought here and sold here? Well, the thing is, it mitigates because the effects, because you will actually buy, the chances of you buying down here is really low. If everyone bought down here, the prices wouldn't be at 50k, they would be at 100k already at this point in time. But people don't buy there because they're scared. But if this system, and this is just an example, I don't think it's a very good example for a real market. Please don't use this. Do your own strategy, make your own strategy. But this basically just allows you to have a certified entry point, which is not guided by emotion, because it doesn't matter how you feel at this point. Your system tells you to buy, then you buy. And it also doesn't matter how you feel at this point. Your system tells you to sell, and then you sell. And then you've taken out the emotionality. Of course, it is not that easy. We'll still be an emotional human. But you have a much, 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 much better guideline to actually, do your trades. If you want to know more about trading, if you want to learn trading, if you want maybe a course on the entire topic, how it works, also psychologically, if you maybe are interested in a full trading strategy, new articles on the topic of trading and crypto, trading signals, and just more things, you can check out our website. That is the first link in the description, and we have all of that ready for you. These are different tiers, and this is what we offer. Trading course, analysis for Bitcoin, Ethereum, trading strategy, monthly article, so on and so forth, depending on the tier. Now, how do you actually form a strategy in the first place, or how do you analyze this? And this is something that we will be going over in another video, which is going to be uploaded in a couple of days' time. So stay tuned for that. Make sure you like and subscribe to this video so you don't miss this next video. And I think with that enough said, I will see you in the next video. Bye-bye.